Hey traders, happy Tuesday everybody. Welcome to Charts and Coffee. Hope everyone's doing great. We have another interesting morning. Let's take a look. I'm going to run you all through the daily time frame of the indices here very quickly. And you'll notice that we had just a bananas bounce yesterday, and that's okay. That's fine. We have these kind of bounces, and I think the first thing traders start to wonder is, what was it that did it? And sometimes you're only going to see it. We're only going to see it very much in the rearview mirror. But if you've got the automated, this is the Darvis 2.0 right there. If you've got this running on your chart, and I know I've mentioned it a lot, but I know we always have new folks here in Charts and Coffee, so always great to have our growing caffeinate and dominate crew. That's an area of Darvis. So we have a purple line here. I'm trying to get it exactly over top of that line. There we go. Purple line there. That's your Darvis telling you, hey, you know what? This was an area of, let's try this again. This is an area of support before, and it's probably going to be an area of support again. You can see back in here, another Darvis level. So let's grab that one too. Put them right on top of that level, boom. And then that pretty much nailed the low. Now, I'm not saying that's where we step in and buy. But if throughout a trading day, you're wondering, gosh, where could there be a level, amongst the many levels that we're crossing on any given day, where could there be a specific level that if you were looking for a buying opportunity, you would start to look at that price, and then additionally, whatever indicators you use to confirm that that is indeed support. You can do this on a daily time frame. You can do this on an intraday time frame. It really doesn't matter what time frame you use it on. The idea is you've got some price levels objectively, automatically determined on your chart, and you're good to go, right? And then we could have drawn levels further down. And you better believe as we move lower, I'm going to start looking at the history. I'm going to start looking back at the price action and ask myself, what are other automated Darvis 2.0 levels that I need to keep an eye on? And we've cut through so many of them, right? This is not an easy market by any stretch at all. The other thing I'm going to show you before we jump into the questions is just kind of keeping some bearing on how much we have sold off already from the highs. And you'll notice we absolutely took out the down 5%, right? Absolutely took that 4,500 level out, took out that, and then we look to about 42. And if that doesn't stick, we'll look to about 15, 20, 50. These are common psychological levels that are sort of, if we have a shallow retracement, 5%, maybe even 10, people will use words like correction as opposed to crash. To me, anything at 5% is usually just a retracement, usually of a choppy market or trending action. Past 10, past 15, the sentiment does change. The most important sentiment level on this chart is going to accompany 4,400. This, of course, is the S&P futures, and that 200 exponential that I use the propulsion, simpler propulsion, to plot on the chart. Again, just an easy level to look at where sentiment does change, right around 4,400. All right, so we'll measure these levels and just sort of keep that in mind so we don't get too out ahead of, right, the narrative, panic prematurely. So I'm just going to turn that off. I think I could just undo the show study maybe, and we'll just move on from there. So as always, this show is about your questions, and so we'll jump into those here. Let's see, did that make them go away? Perfect. Okay, let's get to it. So starting off with our very first question. Good morning, good morning. Can we take a look? Hey there, Scott. Can we take a look at NVDA? Absolutely. So taking a look at NVDA, let's use the same process. Do we have a downtrend here? Well, I'll always say you want to count the red grab candles, count them. Once you start ending up with about 8 to 10 red grab candles in a row, which we have. And by the way, I walked through the details of all of this in the free video from last night called Don't Front Run a Downtrend. And you might say, what does that even mean, Rog? Front run? That has such a negative connotation. That's kind of to remind us that front run simply means to get out in front of. Usually it means something more insidious, like front running an order. And sure, of course, I'm sure that happens in the market, of course. However, I'm talking about front running your process. I'm talking about front running and making assumptions about what a market's likely to do. So it's very dangerous to front run a downtrend because the tendency for equities is to move higher. It's actually okay to attempt to buy oversold levels and front run an uptrend. That's sort of the natural movement of the market when you look at it over time, but not movement lower. So do not front run a downtrend. Do not think that, well, it looks like a downtrend. Let's go ahead and jump in short, especially at the lows, assuming it'll keep going lower. Be very cautious with that. So Nvidia is a downtrend. We use the 813.21 and the 34 EMA wave to determine the momentum. So that's MOMO. And the second one, for those of you that know my work, is the trend. All right. And I realize for a lot of you, what I share might be kind of new. I think about the audience that, was here at Simpler maybe in 2015, 2016, heck, even 2014, 13, when I was doing back in the day, Simpler Forex. And then, I look at, here we are in 2022, and it's a brand new audience. And I realize a lot of folks unaware of the TOPS layout. Now, if you're in the options room or the futures room, I'll be walking through this. These are free tools. I've made them available since we had the TOPS class. So I'll be showing you all how to put some amazing free tools on your chart, especially in this environment, to understand weakness, to measure it better, to be more objective about it. This is a downtrend, Scott. However, where we are right now, please don't underestimate the power of the 200. Now, whether you use an SMA or whether you use an EMA, please remember that this level is a psychologically significant level. I don't believe that we're really, really in the bearish hemisphere. Think about northern and southern. Well, in the market parlance, it's bullish and bearish. This is the equator. I don't think we're really in the bearish hemisphere until we're below that level. And there will be some lingering bullish, opportunistic, bottom picking, bargain hunting, blue light special buys that will gravitate in that area. We've got the beginning of perhaps a minor low pattern. Let's keep an eye on the 2388 so 233.8 to about 234 for maybe some bullish momentum and a bounce from this area. You might say, Rod, but we're double red. Shouldn't I short the rip? Yeah, we need the rip first, right? So there's no reason you can't play what could be an oversold bounce with the minor low. And then if we get up to, say, 265, even 255, 270, there's no reason you can't take advantage of the strength and ultimately short the rip. So thanks for the question, Scott. And again, keep that 200 propulsion. If you head on over to Countdown Trader, you can download propulsion right now for TradeStation, for TOS. If you're on TradingView, search Simpler Propulsion. You'll see that. Put an 200 setting. And you notice I use a white color, so I always know which propulsion I'm looking at. Red, yellow, green. I got a white, so I know which moving average cross and moving average I'm replacing with the propulsion. And I think you're going to notice some really cool levels that you can take advantage of. Minor low plus that 200 propulsion can be very, very cool. All right, next up. Hey there, Michael. Good morning. Looking at the potential minor low on the daily of the SPY or ES. You got it. Let's take a look at the ES. Does the break of the minor lows high have to come on the next candle? No, if it's an inside day. So to your point, if we have an inside day today, in other words, this particular candle here for the 25th for Tuesday does not go higher than 42.12 and 3/4 and does not go lower. I'm sorry, does not go higher than 44.27 and a half and does not go lower than 42.12 and 3/4. That's the high and low from Tuesday. As long as we're inside of that, as long as we're swallowed up by that, as long as it's a harami, however you want to look at it, then we can basically negate today's action and then look for a candle that takes out specifically 44.27 and a half. Again, Tuesday's high. So no, it's not really a huge problem in that regard. All right, it's just we can't make a lower low. So as long, and now I don't want it to take too long, right? I don't mind an inside day, maybe two. Notice we're at that 200 as well, much like the earlier question Scott had about Nvidia. I don't want it to take too long because that sluggishness, we want to see elasticity, almost like pulling the arrow back and then it's shooting forward. So there should be some speed to this, right? I think that there should be a little speed to this. We don't want it to be lethargic. All right. Do I trade any of the volatility instruments? Very rarely. I will monitor them, but I don't trade them a lot. I actually don't trade them a lot. But I mean, clearly, with the tools that I share with you, Ronaldo, you can look how beautifully. Oh my gosh, look at this. You know what? Look at these darkest levels. I mean, look, I would sing songs and write poems to this tool. It's amazing. Darvis 2.0, boom. And if you don't have automated support and resistance on your chart, and there's really no other, I don't know of any other indicators that would do this with the time-tested Darvis methodology, but modernized, and that's exactly what this is. Throw these on your chart. They are going to absolutely take out so much of the subjectivity and sort of wishful thinking analysis that we all are subject ourselves to. We want the market to do a certain thing. That bias, that cognitive bias, seeing what we want to see, seeing what we need to see. When money is involved, if there isn't a better reason to automate. And that's the direction I've been taking my career and my indicators in more and more, just automate it. So I don't a lot, but it doesn't mean you can't with the tools that I share with you, Ronaldo. Thank you for the question. All right, let's see. You made a profit short pre-market. Yeah, you know what? Cool, Mark. That's awesome. You know what? I'll tell y'all. When it comes to risk aversion, and I talk about this quite a bit when I'm teaching day trading and so forth, but really for any kind of market environment, yen strength is something to keep an eye on. When there is yen strength and even Swiss franc strength in terms of relative performance, that's usually fairly indicative of risk aversion in equities. Now, it's been sort of reduced to what's the Aussie yen doing, but that's an incomplete and dated view of the yen's relationship. Aussie yen is really rooted in the time where central banks, their interest rates were such that we had a chasm between the higher interest rate of the Reserve Bank of Australia and the lower interest rate, central bank rate of the Bank of Japan. Back when there was a huge chasm between them, there was something called the carry trade. And Australian dollar, usually commodity dollars, typically like strong equities. And so you'll see the yen borrowed or sold in order to buy higher yielding assets. Well, central banks that have a higher yield, that's one type of contrast. Equities, that's another type of way to sell this inexpensive or borrow this inexpensive currency called the yen and use that to fund the purchase of what you would expect to be higher yielding assets. So it's really the yen. It's not the Aussie yen specifically. It's really the yen. And if the yen is strong, keep an eye on it. I wouldn't call the yen particularly strong here, but there's a lot of different relationships the yen has. US dollar yen, Canadian dollar yen, pound yen, euro yen. Euro yen is a very interesting one because that's really a way to look at the dollar through the prism of the yen. And I think that, yeah, to look at the currencies, which are the largest markets in the world, gives us a terrific advantage. Red Dragon, what would the V-score start and stop times be? There's no stop. It's just the next time we go to 2 a.m., Red Dragon, it starts to just start all over again. So I don't have to give it a start and stop. Just 2 a.m. is the start and stop. We roll back over to 2 a.m. It resets. So think of it as a reset. All right. Thank you for the question. Robert, CBS. Sure. Let's start with structure. Start with market structure. This is predominantly a double green market. We have one blue grab candle here. And that was enough to send this to a neutral. Now, if you know anything about my work, you know that just because a market's gone neutral doesn't mean we get bearish and doesn't mean we assume it's chop. We look at the trend that preceded the chop, which I don't think anyone looks at this chart and says it's time to get short. And that little bit of weakness, if we're looking for a Y, look at the ex-dividend date. That's oftentimes a little bit of a drop that date passing will cause. So is it difficult to say we want to focus on more conservative dips to buy in CVS? Not at all. I think it's a great time to look at sticking with the long side as a trend follow in CVS. Thanks for the question, Robert. All right, next up, William surfs up in South Florida. Has it been windy? My husband likes to surf, but I won't surf when it's this cold. When it drops below 60, I'm an unhappy girl. So I would appreciate you looking at a couple of stocks, RRX and GPC. Sure. All right, so RRX, treat this as a choppy market. We have a little bit of bearish momentum, neutral trend that preceded was up. So I'd rather, you guessed it, focus on oversold support levels. Here's where the Darvis 2.0 comes in, identifying where that level could be. We're still north of the 200 propulsion. There's a certain bullishness there. And then so now what do you want to do? Well, you want to look at a ready aim fire. You want to take a look at a slow stochastic. Whatever way you, here we go, identify what oversold can be, and there you go. So this is what we're looking for. Ideally, what do I teach you all? I think a lot of you know. Price first, indicator second. And then also, structure dictates strategy. What's the structure here? Chop, bullish bias. We want to be looking at oversold support, and then look for the confirmation of oversold support. That's RRX. Also, gang, in this time, earnings season, be aware of where you are in terms of earnings, right? Of course, proximity to earnings. Inside 2 weeks, please be cautious. All right, so GPC is the next question, and that's a very big candle. This is a choppy market, clearly, and the zone that becomes increasingly oversold right here. Notice those levels preceded that drop. They're just hanging out there. It's our job to go back and recognize that this is indeed support. And in the context of chop, that's when I go down to the slow stochastic. Beautiful signal right there. And it's already in the price zone, right? Notice I'm not saying, oh, the stochastic gave us a signal. What was the underlying market behavior? Where was the price zone? And are we still above the 200? Correct. So we have a bullish bias. And then last, hey, is this agreeing that we are indeed oversold? And the answer would be yes. Is oversold corresponding with that price zone? That's the way you do it, gang. It's just that simple. That's the way we do it. All right, next up. All right. Is this not a market to day trade, or does it matter? Al, oh gosh, I love this question, Al. Is this not the market to day trade, or does it matter? Absolutely matters. And I think you know this, and I love that you've asked this question. And the question really comes down to, are you nimble across multiple time frames? Are you comfortable with a 5-minute and a daily and maybe even a weekly, which is the bulk of what I look at, very little in between. So when price action is unpredictable, when we have sessions that are up, down, and we're in chop, how nice is it to find the relative comfort of not needing multiple days of follow through, just shortening the time frame and day trading. And that's why we focus on, in my Sector Secrets Mastery, we focus on day trading in the morning for 2 hours. I love the Monday, Wednesday, Friday zero dated options where we can day trade, sure, S&P futures, mini and micro, but also the SPY zero dated option. So We do that in the morning, pencils down at 11:30, and then we focus on the longer term daily. So we have an approach in the sector sequence mastery that focuses on index sector stock, always relative performance. And we're going to talk a lot about relative performance as we go forward, probably starting next week. And then having that shorter term time frame is absolutely a superpower. So thank you for the question, Al. I really do appreciate it. Wonderful, wonderful. Can we trust the trend during this time? Not if, in Marvel. Let's do that last question. I'm going to jump on over to the futures room. This is not a trend right now, right? Though, RD, this is that beautiful 200 potential minor low, and my friend, this is chop. So no trend, no trend. That stopped some time back, right about here. And now we're going to treat this as a choppy market, but with a bullish bias. Okay. All right, gang. Have a terrific day. We've got FOMC tomorrow. Caffeinate and dominate. And sometimes that means putting your keyboard and mouse in the drawer and just doing your homework and focusing on your watch list. We'll be talking a lot about watch list building coming up here in the rooms, here in Charts and Coffee. You're going to love the way I show you a relative outperformance with those same JT multis. Be good to each other. I'll see you tomorrow. Same time, same station. On your way out, by the way, smash that like button if this is helping you prepare for the morning. Let us know we're heading in the right direction with our content. Leave a question, leave a comment, and I'll see you soon.